Well, hello there and welcome everyone to the Advisor's Edge podcast. I'm your host, Rob Jacomen, and I'm joined today by my co-host, Chad Ramberg. How are you doing today, Chad?
Very good. I'm glad spring is here. We're just waiting for the warmer weather now.
That's awesome.
It's going to warm up and we'll have a great spring.
Well, we got a little bit of a cold spell here where we are in sunny, beautiful Maryland. But we're not going to talk about the weather. Today, we're going to bring on an absolutely incredible guest. She is a world-class expert in the long-term care industry. All of you who are in this industry probably know who she is, and we're really honored and proud to bring on Margie Barrie. She's with ACSIA Partners. She's a superstar. You guys are going to learn so much, and she's going to bring so much value to you today that sit back, bring out a notebook or a writing pad and take great notes because she's really going to deliver for us. So, Margie, we are honored to have you on today. So welcome to our show.
Thank you so much. I'm delighted to be here. I'm really looking forward to this.
Awesome. So, Chad, let's kick it off with some great questions for Margie.
Yeah, absolutely. So one of the funny things is, people probably don't know this, but I was long-term care certified. So I knew just enough to be dangerous way back when. And so when I bumped into Margie and we got to chatting at a conference, I was thinking, it'd be really nice to have you here. So thank you for taking a little bit of time out of your busy schedule. And with that, you and I connected. The guy that taught me kind of how to approach long-term care, personally, he's an attorney, really sharp, and you've done a lot of teaching on it. Your depth of experience is massive, but I'd like to hear first kind of how did you get into long-term care? It's rare that somebody says, hey, I want to do insurance. That's what I want to do, much less long-term care. So give us a little background there, if you would. Okay.
Well, first of all, I was a journalism major. Okay. And so when I graduated from University of Maryland, I had a public relations marketing agency. And one of my clients was a nursing home association. And there were members from the lowest level of facilities that really focused on Medicaid and lower income consumers, all the way to much nicer facilities that targeted a more affluent clientele. And the difference in the two kind of facilities, it was a real eye-opener. And the Medicaid facility, most of them were in downtown Baltimore. And it had rooms that housed maybe 2 patients, even up to 6. I couldn't believe it. And the care was okay. But the higher quality facilities, most of the residents had private rooms, a lot of activities, great care, and was a really nice atmosphere. At that point, I didn't even know the word long-term care insurance. I had never heard of them. Okay. But I was determined that my own parents would never go to a Medicaid facility. Absolutely not. I was going to make sure that they had done the appropriate planning for their long-term care needs. And I didn't want them to lose everything that they had worked so hard for to accumulate. And I didn't want them to be forced to get the substandard care that I had seen in some of the facilities in downtown Baltimore. So in 1990, my husband started a long-term care insurance agency, and I decided to join him after about a year or so. And I was first the marketing director, and then I also became the sales manager. And the first sale was to my own parents, okay? So, and I've been passionate about this ever since because I really saw firsthand the difference that it makes in being prepared for the inevitable changes that we encounter as we age. And guess what? We're all going to age. Nobody is immune from it. So that's how I got into it.
That's awesome. That's great. Yeah. And one of the places that we met was actually at a financial planners conference. I think it was NAPFA. But that was the other thing that really got me interested in our conversations, where we started to dig in about, there's a lot of different ways you can plan to crack that nut, if you will, on what happens when you get to that point in life. And my just a quick personal story here. My grandma, which was interesting, she had bought a long-term care policy way back. It was either in the early 90s or late 80s. And it was a lot different back then, as I'm sure you know. So the way it was structured for her was like $120 a month, right? And she was up here, late 2000s, in her 80s, and things were going reasonably well. And she's like, you know what? I want to save a little bit of money. And I said, Grandma, whatever you do, don't cancel that policy. She didn't listen to me. She canceled it. And then her husband went into long-term care, and then she was on hospice, and then everything passed. And as you know, it like you kind of alluded to, they're going to pull the money, the assets away, unless you have a structure or a plan to do it, which if you got a lot of assets, maybe that's a good plan, or maybe not. In my grandma's case, the family would have had an additional $300,000 if she would have kept the policy, which would have been a very good way to approach it. But industry challenges, and I could be way off, but it seems to me that a lot of really good advisors kind of get stuck in the focus of, well, we got this pool of assets, we'll just make sure that that's enough to be able to do it, which may be a great way to do it, maybe not. What do you see as kind of the challenges for advisors out there when they're thinking about long-term care?
Well, I think that particularly from a client perspective, there's a lot of denial.
Mm-hmm.
Okay. So, I mean, and it started from the beginning, since I started this in 1990, and it's still continuing. And I think that for advisors, that either they feel uncomfortable talking about it, or they figure, well, this client has enough assets, they don't really need it. And I think that there's some interesting perspectives on this. First of all, the long-term care, it's tax-free dollars coming in. Okay. While if you have assets that need to be liquidated, you're probably talking about tax consequences. So that's a big difference right there. And also what I've seen personally is lots of times a long-term care situation starts with a medical crisis. And with what's going on with the hospital system and everything else, it's really stressful. Everything is sort of changing because of Medicare problems and the whole bit. So when you come home and need home care, at least you have a small stream of income coming in to help offset those expenses. I have to tell you, that is an incredible help for whoever is involved, whether it's the spouse or a daughter or even a son or whatever. So, and the other thing is that what we're seeing, and I just came from the recent ILTCI conference, the national conference, over 50% of the claims are for dementia, for Alzheimer's. We're seeing an incredible growth in that area. We're talking about long-term care needs, anywhere from 6 to 8 years, but it can be as long as 20. So if you're a financial planner and you have assets under your control, you don't want to start to liquidate, particularly those kinds of dollars. So even if the client has some protection in place, it's a big help to the financial planner because they don't have to worry about losing their AUM. It's also a big help to the family. So there's no losers in this, really. I mean, it's a win-win situation.
So
yeah,
Margie, what you're saying is you can also leverage long-term care insurance and that structure around truly helping both the financial advisor and the client in terms of better protecting their current assets, so they don't have to really dip into that right away, and they can leverage that as a strategy.
Absolutely. And I've provided some more examples for you, but say that a client spends a certain amount of money for the policy, because there are several different kinds of policies out there. But like for the hybrid, for example, if you include inflation benefit and some other aspects of this, you get incredible leverage. I mean, you can get 90% leverage on the money that you're putting in. It's amazing when you see how the numbers work. And then if you don't use it, you get the money, your heirs get the money back. So there's a lot of advantages from both perspective, from the financial planner perspective and also from the client perspective. And one of the things I'm going to be sharing with you, and we're seeing this more and more, claims are definitely increasing. And the financial planners are going to be getting calls from clients saying, hey, I'm going on claim. I need help. I need money coming in. Yeah, they're going to be seeing that more and more, and because that's where the trend is going.
Yeah, it's interesting to me. One thing that kind of occurs to me as we're talking here, when a financial planner is growing their business, one of the things that's important is to connect, later generations, and kind of it's really not just a business growth strategy. It can also be a business protection and development strategy to bring in those future generations, right? And that what I hear from you is the conversation around long-term care, whatever the plan ends up being, can help connect all those individuals together, actually strengthening a financial firm. Now, there's also misconceptions that could happen out there. And because you're so close to these conversations all the time, what type of misconceptions do you see, either from the end client or advisors, in that discussion of long-term care?
Let me just comment on how you segued into this, because this is sort of interesting and we hadn't really addressed it before. But
Yeah.
I have something that I call the family legacy strategy. And so one of the interesting things about the conference I just came from is that the whole claim structure is changing a little bit. And so I'm going to be doing some columns on it because I found it fascinating, but also it was really interesting because agents we aren't really aware of those changes that were occurring. And certainly financial planners aren't going to be aware. So it's important that when I sell a policy, I do a delivery meeting with the client. And what I'm also suggesting to the client is that we need to set up a time with whoever's going to be supervising the policy, whoever's going to be supervising the care, because they need to understand. And what I'm saying to the financial planner is, you should be part of, if you want to be part of the delivery meeting, fine. And you should be hosting the meeting with the children. And that is definitely a way to bring that next generation in. And so when the client passes away, it also means that the financial planner has a better possibility of keeping those assets under control. So I'm definitely talking about that to the financial planners that I work with. But let me go back to your question, Chad, about the misconceptions. I think that the one I hear most frequently is that Medicare is going to pay. Medicare is going to pay for my long-term care. The answer is no, an emphatic no. Okay. Expenses are being cut all over the place with Medicare. Now, Medicare does a great job of paying for doctor bills and hospital bills. Okay, but for long-term care expenses, it's not happening. And it was interesting because yesterday I happened to be visiting my primary care doctor just for a routine examination. And he was saying like, oh my gosh, Medicare cut back again on the amount of money that they're reimbursing me. And it was like, really? And he would tell me the percentages. It was like a real eye-opener. But here's the thing, Medicare is in trouble. And expenses are being cut back in ways that you don't even realize until you encounter it. So, for example, the Medicare policies say, hey, we're going to pay for nursing homes for 100 days, up to 100 days.
Mm-hmm.
Okay.
Mm-hmm.
Reality, they pay 5 to 7 days. That's it.
Wow.
Okay. So say that you are a nursing home owner. Okay, Chad or Rob, whoever wants to own that nursing home. And it's your Mercedes in the parking lot. Okay. And so days 1 to 4 or maybe 5, say you're going to get 600 hours a day for that nursing home bed, for that patient who's in there. Day 5 or 6, that's going to be cut to say 400 hours a day. Say that your mother's health problem is so severe that you've now decided that she should be in hospice, okay, because the end is coming. And so this actually happened to my own mother, okay. At age 99, she fell and she had a brain bleed and a stroke, and she was in the hospital unconscious. And the hospice worker there, the hospice nurse said, oh, you should move your mother to the nursing home, to the facility, the hospice facility near your house. It's right there. It's beautiful, great care, which was true. Okay. So, and I asked him, I said, will Medicare pay? I asked him twice. He said, oh, yes. So the ambulance came, they moved my mother. And it was only after we got there And then when I had to sign some papers, and I saw it says, well, Medicare will only pay for 2 days. I said, what? I said, well, nobody told me this. They said, oh, you were upset. And I said, well, what happens after 2 days? They said, oh, and then you're billed and it's based on her assets and her income. So it's those kinds of things that you don't even expect because Medicare is cutting back. And so for those who are listening to this podcast, I have provided a request sheet that really contains a lot of helpful information. And so one of the things in the request sheet is a Medicare white paper that I did that explains what is going on with Medicare, why, and provides some of the information that I just shared. Okay, that was misconception number 1 about Medicare. Misconception number 2 is, gosh, if I have assets, either with my financial planner or in the bank, I don't need long-term care. And that myth is shared by a lot of consumers and maybe even some financial professionals. And we will be discussing that in a little bit more detail because I put together some really good stats there. Third misconception, I don't need this because my family is going to take care of me. Okay, so think about this scenario, all right? And I use this a lot when working with married couples or couples who are engaged, ready to be married, like you, Rob, okay? So I'm going to make an assumption. I'm going to assume, okay, let's just pretend you're married at this point because that'll be easier, okay? And say that your wife is several years younger than you. Okay, so what's your first name? Just tell me her name.
Cheryl.
Cheryl?
Cheryl.
Sure. Okay, cool. Okay. So I would think that Cheryl weighs less than you do. Okay. And I'm not trying to critique here, but okay. And so what about down the road when you're older, you're frailer, say you're 80 and your health has changed dramatically. Okay. And you need help. You need somebody to come in to help bathe you or maybe to move you from the bed to the chair. You weigh at least 30 pounds more than she does. So she's not a good candidate to do that. So she's going to need help. And she hires a home health care aide, but you have to pay for that. Okay. And you're going to have to start taking money out of your savings and assets to pay the significant additional expense. You with me on that? Okay. So who's that really going to impact down the road? It's going to impact Cheryl because there's going to be diminishing assets in your savings. And so she's probably going to outlive you because women live longer than men. And she's going to need those assets to pay her living expenses. So by having a policy for you and definitely one for her, that will enable her to have the lifestyle that she desires and also that she deserves. So do you really want to put this caregiving role on your spouse, or do you want to put it on your daughter or your son? Okay, not a good idea. And also, the benefits that you receive from these policies are tax-free. And if you don't have a policy, you have to start liquidating some assets, there will probably be tax implications. Now, you don't have to cover the full risk, shouldn't, but you should take on some of the risk and put on some of the risk on the insurance company. And that's how, when I'm working with clients, that's how I structure it. Okay, so what kind of costs are we seeing? Well, I took a look like in the middle of the country. I said, okay, Texas, let's just start with Texas. And actually the costs were much less in Texas than other parts of the country. It was interesting. But in Texas, say home health care is costing $32 an hour. Okay. Assisted living, $172, and a nursing home, private room, $250 a day. And I have to tell you, that's pretty inexpensive because lots of places it's $450 a day for a nursing home, but I was just going to use those numbers. Okay. Now, Rob, say that Cheryl needed care for 4 years based on today's numbers. All right. So we're talking about $314,000 that you would have to pay out over the 4 years. Let's project ahead. I don't know how old she is. I'm not going to ask how old you are. Okay. But let's say that she needs care at age 85, say in 30 years. That cost is going to be over $1 million. And that's just her. That does not include you. So the question becomes, is that the kind of money that you want to have to pay down the road, or pay a fraction of that, a small fraction of that, to get long-term care policy? So that's some of the ways that I look at it. And also, I had mentioned the request sheet a few minutes ago. I've also provided a column about 12 reasons long-term care planning matters to women. Because women really are the decision makers in this, because we get it. I'm sorry, guys, I didn't mean to put you down, but women understand how difficult it is to be a caregiver.
It's
well,
true.
I do like picking on Rob. Okay, so that's just a lot of fun. I can't resist.
I love it too.
No, you're always a good sport, Rob. And and that's a great example of kind of how you can help remind us of these key things that can come up around the different dynamics of this and really what the options are available. And so that's really great. I'm curious, over the last, I don't know, because you've been doing this for a little while, for a minute or two. And we've seen such big differences in the financial services world, a lot of shifting from the broker dealer model to the RIA model. And, that can be a lot of different things. So a lot of fee only work out there being done. And you work with, one thing I'm kind of picking up as you're going through this, you're not only working with clients, but you're working with financial advisors to help them help their clients better. So over time, how has that kind of changed? How's the industry changed? And how does that adjust how you're working with the individuals?
I'm sorry, clarify that. How am I working with financial advisors?
Yeah, because the financial advisory world has changed so much that you used to have, and there are still some out there, right, where you have the financial advisors or a life health license, although they may not be experts in long-term care. So they may need to chat with you on how to get some help with that. But also for the fee-only advisors out there, how has that changed over time? And has that adjusted how you work, or maybe not? I don't know.
No, it really hasn't. I think that financial advisors need to mention this to their clients. Mm-hmm. And hopefully we're seeing more financial advisors doing that. And my feeling is that their job is a client's financial situation. They're there to manage their lifestyle. And I'm there to make sure that long-term care doesn't destroy it. So it's a partnership. Mm-hmm. And I truly believe that all clients should be given the opportunity to learn about this, no matter how much money they have. So I think that financial advisors should look at it in this way. Okay, when you work, say, with a couple, there's 4 possibilities here. One possibility is that neither one of them is ever going to need long-term care. Mm-hmm. Actually, it's a pretty slim possibility, since recent statistics are showing that for a married couple, there's a 91% possibility that one of them is going to need care. But let's say that possibility 1, neither. Possibility 2, only the husband is going to need care. Possibility 3, only the wife will need care. Possibility 4, both of them are going to need care. So the bottom line is, for these possibilities, with 75%, care is going to be needed. So from a financial planning perspective, doesn't it make sense to at least discuss the concept, discuss the need, and hopefully to provide some planning or protection for them? So I think that it is important for financial planners to mention it. And there's different ways to do it. I mean, the easiest one is just say, have you done your long-term care planning yet? I mean, that's mm-hmm. easy. And if they say no, then ask them, like, well, when you and your husband experience a long-term care event in your future, how are you going to deal with it? And if they need some advice on how to deal with it with different segments of different age brackets, I've included in the request sheet suggestions on what to say geared towards a different age bracket. Okay, mm-hmm. Another suggestion, and this is really important, ask if there is a family history of Alzheimer's, vascular-related dementia, Parkinson's, or MS, because there is a genetic tendency for those conditions. If the client answers yes, that means they are at a high risk at some point of needing long-term care. They definitely need to purchase this protection. I have a dear friend, I actually went to high school with her. Her husband was a very successful attorney. He had Alzheimer's. He was in a facility for 12 years. She is now on Medicaid. She's now on welfare. I've been trying to help her as much as I can, but it's pretty scary because here she had this great lifestyle and now she doesn't. And we are seeing 50% of the claims being caused by dementia. Average long-term care need with dementia, anywhere from 6 to 8 years, but it can be as long as 20. So pretty scary. So who in the world would want to spend $8,000 a month or more in today's dollars to fund that kind of expense to stay for 12 years like my friend did, Ellen? So wouldn't your clients be better off if they spent a fraction of that and got coverage for hundreds of thousands of dollars of tax-free money? I mean, you just don't know. If we had crystal balls, that would be great, but we don't.
Right.
Can I share one thing real quick?
Yeah.
Because we're going through the same thing right now with Cheryl's parents. So I think what's interesting, and I think for everybody to really know, and I think this is something that financial advisors and everybody should really, I think stories hit home the most, because when it happens to you or you're going through it, it's the best way to, for lack of a better term, to be able to sell this idea to a client. But I think, again, it comes down to education, but stories sell, and really you're able to not convince somebody to do it, but you're like, listen, here are the numbers. Here are the statistics. Here's what happened to me. And like Cheryl's in that situation right now with her father. And I may cut this out. I don't know, but it's something that you have to plan for. And not everybody is thinking about this, but when you go through it yourself and a family member is experiencing this, that's where the story really becomes more powerful and hits home, is when you have to go through this yourself, like Margie, like you said you did. It's those kinds of things that we need to do a better job at sharing those stories and educating clients on why it's in their best interest and why they should value it. And so that, I'm glad you brought that up, because for me, it hits home, because as Cheryl's partner in this, and I can see where all of our parents are going to eventually go through this, whether they're here or, like I know some people don't have parents, but I'm at the age right now where I want my parents planning for this. And I want for Cheryl's parents to be planning for this. And they've accumulated quite a bit of wealth. And the last thing we want to see is that kind of situation where all of a sudden you get that phone call and it just starts the whole process. And pretty soon you're like, wow, we didn't plan for this. And all of a sudden that money's gone in no time. So this is something I'm glad you're bringing this up, because it hits home for me. It sounds like it hit home for you too, Margie. And only when you go through that can you really share that experience with somebody to where it really hits home at an emotional level.
You're right. You're absolutely right. And one of the interesting things, Rob, is that many of the people who reach out have had personal experience. So they've been living it and they see how difficult it is. So that is like a real motivator to do something about it, because it's expensive, it's stressful. It can be a horrifying experience.
But not to say that this is a conflict of interest, but let's talk about the reality. For a financial advisor who's also protecting that client from any financial disaster, it also helps them as well. Because if you think about it, and let's be honest, let's have some truth serum here. If a financial advisor and someone who's advising them on how to plan for their future when these things do happen, it's also at the same time, number one, they're doing their job. They're adding value to that relationship. But at the same time, they're also protecting that person's wealth. And in doing that, they're also protecting themselves and their business. So can you talk a little bit about that, as leveraging the long-term care planning model that you're talking about, how can financial advisors leverage that to also benefit their business?
Well, let me back up for 1 minute, okay? Because I think that financial advisors, in order to do the best job for their clients and to make their clients happy, which will certainly benefit their business, they should work with a long-term care specialist in this arena. Most financial advisors, they don't have the background in long-term care. They don't have the experience. They don't have the time to handle all the details that are part of a long-term care analysis, the health inquiries, the underwriting process, and even monitoring the application process. And so that's why I work with a number of financial planners, because that's all that I do. And where I'm affiliated with, we represent all the top carriers. So I do a very, very detailed analysis. I figure out which product is going to be best, which combination of benefits, and it has to be comfortably affordable. Mm-hmm. And I also, however the financial advisor wants to be involved, that's great. If they want to be part of the meetings, great. If they just want to be updated, that's great. And here's another important reason to work with the financial advisor, with the long-term care specialist. The market is continually changing. It's unbelievable. I mean, we're talking on a Friday. I have 4 hours of training sessions today. And look, I've been doing this since 1990, okay? So there are new products being introduced. Certainly hybrid products are now leading the market, but there's a number of short-term policies that are now being launched, which is a great solution for those who have limited funds or those who have major health problems. Underwriting continually changing all the time. And so it's important to be knowledgeable about that, because we don't want a client to be declined. Approval for this is based on their health. So financial planners work with their wealth. My job includes learning about their health. Yeah. Every medication, every surgical history, and all the many details involved. And then figuring out which carrier is going to be the best solution. So this is a true story. It just happened a few months ago. Okay. Female client, her name was Lisa. We applied for a hybrid policy, and I had submitted her to pre-underwriting, which is part of my process. And I received a green light from most of the carriers. Then, to our dismay, she was declined. And I spoke directly to the underwriter. I was like, what's going on here? Why? Well, it turned out it was due to a certain medication that she was taking. Now, I had submitted that medication during the underwriting process. It had not been identified as a problem. So I did some additional research online, and I found that the medication had two formulas. One included a narcotic and one didn't. So I asked Lisa to contact her doctor to find out which version she had. And it turned out that she was taking the version that did not include the narcotic. So I had the doctor write a letter to clarify that. I then sent it to the underwriter. I called him right away. And then I could call Lisa with good news. She had been approved. But you need to understand what's going on behind the scenes and when you can question and when you can't. And I got to tell you, it takes a lot of time in order to pull that off. So that's just an example of the intricacies that you go through in doing this kind of sale, doing this kind of protection.
That's the benefit. That's what we talk about all the time, Chad, right? This is why you work with the specialist who does one thing world-class
really well.
Else. Yep. Somebody who understands all the stuff that, man, what Margie just said went right over my head. And I've been in insurance almost 20 years. I didn't understand most of it. Well, I understand the underwriting part, because underwriters can be challenging to deal with sometimes. No knock on underwriters. It's just they have their checklist and they kind of go through their process. But Margie, what if we're going to put a bow on this part? At the end of the day, the most important thing is that if you're a financial advisor, the biggest takeaway right now is align yourself with a specialist who understands the long-term care industry inside and out, and who's willing to go to the end of the earth. Like Margie just said, she's on the phone with her client. She's doing research on a medication. She's going back and forth with underwriters. This is the kind of person you want to be working with. Someone who can navigate the marketplace and help your clients take care of this kind of stuff. She's got the expertise. She has the knowledge. She's been doing this since 1990. I mean, that's a long time. So anyway,
well, come on. I was in high school then. So, I got some good memories from there. No, so here's the thing I love about you, Margie, is you have such a depth of experience here, and you're going to be sharing a whole bunch of information so that the folks listening to this can actually, they don't have to become experts themselves, but you can help them get to where they need to be for their clients and I love that we've also taken a realistic look to just challenges in life that we have out there. I love the good story, the success story that you just told us. And can you give us one more cool success story that you've had with a client and an advisor? I'm putting you on the spot. I realize that.
One of my success stories is my own mother. Okay.
Okay. Yep.
So she used her policy off and on for 9 years, from age 90 to 99, when she passed away. All she wanted to do was stay at home. That was it. Mm-hmm. Because she had the policy, first of all, she was able to stay at home. Now, this is interesting. We had some interesting problems. I got a call from the home healthcare agency, and she said, Margie, the aide needs to finish out the day. I said, what are you talking about? She said, your mother fired another aide. I went, oh gosh, okay. Oh. So what we ended up doing was we bought my mother an iPad for her birthday, and then we found an aide to give her iPad lessons. So she never fired her again. So that was cool. But she never had to liquidate any of her assets. She wanted to leave money to her children, her grandchildren, and her great-grandchildren, and she was able to do so. She was able to stay at home for off and on for like 9 years. There were a few hospitalizations followed by nursing home stays, but they were short. She returned home. I think the bottom line is that she had the quality care she needed. She was not a burden. And boy, that was the best gift that she could have given to her family. I mean, it was just incredible. So that to me is one of the success stories.
Right.
So, and working with financial advisors, I actually have a call this afternoon with a financial advisor. We're going to be writing the spouse of a client, and we're just doing, I mean, they're younger, and I just feel so good about the coverage that we're providing. It's just so in tune for them. It just absolutely makes sense. They do have assets. They have considerable assets. But this just provides an income stream that'll be easy for their kids to use if and when the care is needed. So, I mean, I do that a lot. And I know that the advisor is going to want the rest of the details. I have it all prepared. We've done a very detailed analysis about which way they're going to be ready to go, which product. And so the answer, when I put the numbers side by side, the answer became pretty obvious. So, yeah, I do that a lot.
You know what's so interesting? What it just dawned on me, and it takes me a while because I'm slow, but I just picked up on this. I think what you're talking about too is the connection between what it does is it accomplishes several things, and it really helps people, everyone in the family. And I thought about this, and I don't know if this is the right way to look at it or not. It's like, do you want to spend and tap into your financial wealth and send it to a long-term care facility? Or would you rather save that kind of money, save your money, save your wealth to pass along to your children and other, next of kin? Without this protection in place, there's only one place it's going to go. And that to me is what just dawned on me, is like, you can protect your wealth. Becomes a wealth protection strategy so that you can honor your family's legacy and pass it on to your children and do a lot of good. Whether you pass it on to your children or it goes to charity, it doesn't matter. The bottom line is you can leverage your wealth that you've accumulated over those years. And I almost feel like instead of wasting it all because you didn't plan properly, that money can now be used for its intended purpose. And that's kind of like what just dawned on me all of a sudden. I don't know. I just got it.
Good for you. Okay.
Yeah, no, this has been a very, in my opinion, very fruitful conversation, but it's also a deep, deep conversation that I think we've just scratched the surface on. And so what that means is we may have to have you back, but so what we're going to do is we're going to land the plane here, as Rob likes to say, a little bit. And that is what I really like to hear from you is when you're sitting back, several decades out and a life well lived, what are people going to know you for? What do you want people to know you for? They say.
That's a very interesting question. I think first of all that I've been very fortunate to be in this industry. I mean, whoever knew that selling insurance could just be so gratifying. So I think there's two achievements that really stand out that I'm really proud of. Okay. Mm-hmm. One is the information I have been able to share with my column. I've been doing it since 2000. And I love it. I mean, I've never been paid for it. I think one time I got flowers, that was it. But I've never been paid for it, but that's fine. And also, if the information is really helpful, I will send it as part of my newsletter, to my clients, to financial planners, to CPAs, attorneys, and others who understand the need for being kept in the loop about what's happening as we age, because I'm really on the forefront of getting all this knowledge. So that's exciting and that is fun. And second, I've worked with a lot of financial planners over the years and also my own clients, and I have helped them help their clients protect their assets. And so the more people I educate, the more people who have a plan in place and are prepared, I'm just so glad I could help them achieve that peace of mind. And I think that's one reason why I'm so passionate about this industry. I mean, I just love what I'm doing. I love how I can help people. And I have to tell you, that is a really nice legacy to think about. And that's why I do what I do.
It's great.
Amazing. Margie, you are incredible. You are somebody who I look at in this industry that's you're really transforming people's lives for the better. And that's kind of my takeaway there at the end is it was so deep and meaningful. I can see it in you. I can see it in your heart. And that's something that really resonated with me today. So I'm extremely grateful to have you on. I know Chad, I can't speak for Chad, but I'm going to guess that Chad is the reason why you were on here in the first place. And we are just so honored and grateful to have you on. Margie, how can people reach you if they're looking to get in touch with you and maybe want to talk with you about a partnership or working together? How can people best reach you?
I think, first of all, by email. My email is Margie Barrie at ACSIAPartners.com. I will spell that out. MARGIE.
I'll put it all in the show notes. It's
okay, good. Okay. Or give me a call. I'm in Florida. My telephone number is 941-355-7600. And so I'm always delighted to help new people, help financial advisors. I mean, I love working with financial advisors. I love doing these detailed analysis to figure out what's the best solution. And to me, it's just so gratifying. So yes, I would love to work with financial advisors. And so give me a call. And also the request sheet has provided, I think, a lot of really good information. And I will be continuing to add to that as I continue to write columns. I have a column I'm going to be working on shortly about claims, because we're seeing a ton of claims at this point. And financial planners are going to be getting the call. And so they just need to understand how it works, what's going on. There have been some changes in that arena lately. And so that's the answer.
That's awesome.
Great.
The industry, I'm gonna end it with this. The industry is blessed to have you, because you are a true pro at this. And I think you've been one of our best guests so far at explaining this. And this is a very complex industry, and it's something that I think people really need to pay attention to, especially when it hits home. And I think that's what I'm extremely grateful for, is having you being on here. I mean, this has been just a mic drop moment for you. And I'm just honored to be on here with you. So guys, listen, we knocked it out of the park. We had another guest. It was just absolutely incredible. And please, if you feel that you've got value from this, please like and subscribe to our show, and do me a favor. Do Chad and I a favor. If there are other guests out there, or there are things that you want us to be speaking about or sharing with you, please let us know. Give us some feedback. We'd love to hear from you. Hopefully what we're doing is we're adding value to this industry, and that's our only mission. That's our only purpose. So, all right, we will see you guys again on the next episode of the Advisor's Edge podcast. Thanks for joining us today, everybody. Have a great day.